welcome to the GHS Reporter. Today is Friday, December 5th, and I'm Nalan Tamamani. An Oklahoma University student has recently gone viral for filing a complaint against her psychology professor. According to CBS, the student wrote an essay promoting the belief that multiple genders would lead society to move further from what she called, quote, God's original plan for humans, and earned a 0 for it. The professor said the student's response did, quote, not answer the questions about the assignment, contradicts itself, and heavily uses personal ideology over empirical evidence. Turning Point USA, a conservative nonprofit, responded to the student's complaint, causing a passionate debate online. One side believes the professor didn't respect the student's religious beliefs, while the other side says her work didn't fulfill the assignment. The professor has been put on leave until the situation is resolved. And now, a new segment on the GHS Reporter. Here are members of the Investing Club with their first edition of Market Watch.
Good morning. Welcome to the first edition of the GHS Market Watch Report, presented by the Investing Club. Today we're diving into the growing concerns about the artificial intelligence bubble, the idea that the massive hype around AI is pushing stock prices higher than companies might actually be worth. Some analysts say it reminds them of past market bubbles, like the dot-com boom of the late 90s or the housing crisis of 2008, where excitement drove prices up until reality caught up. But others argue AI is a transformative technology that's here to stay. Now let's hear from Vincent.
The AI market has been booming, with tons of money flowing into AI companies. But there's a big question. Are these companies actually profitable, or are their valuations inflated by hype? Some AI companies are generating real profits, while others are struggling to show tangible returns. Investors are betting big on the future, but many are unsure when or if that future will pay off. The concern here is that some companies are valued based on what they might earn in the next few years, not what they're earning today. That has raised some red flags, especially around Vibe revenue. Startups raising billions based on excitement of the idea of the company's products or services rather than actual sales. Nico, what are your thoughts on this?
One of the biggest worries right now is how interconnected many of these companies are. Major players like Nvidia, Amazon, Alphabet, and Meta are fueling each other's growth. For example, Nvidia gets over 40% of its revenue from its data center segment, which include companies like Amazon and Meta. These companies are heavily investing in each other, which creates a circular financial system. If one of these links breaks, it could send shockwaves throughout the entire AI sector. However, some argue the infrastructure is real, and if executed well, it could lay the groundwork for the next phase of technology. Still, if the market cools or one of these giants stumbles, things could get messy.
In short, what does this mean for investors? Companies with proven business models and real profits may continue to thrive, while those riding the AI hype could face trouble if the excitement fades. If you're investing, make sure you're diversifying and thinking long-term. For more information on this and other investing topics, join us at the Investing Club. The next meeting is Tuesday, December 16th, after school in room 204. We hope to see you there!